So, good afternoon, everyone. I'm gaveling us in. For the record, my name is Julia Mejia. I'm an at-large city councilor and the chair of the Boston City Council's Committee on Post-Audit, Government Accountability, Transparency, and Accessibility. Today is March 20th, 2025, and it is exactly 2:02 p.m. In accordance with the Chapter 2 of the Acts of 2023, modifying certain requirements of the open meeting law and relieving public bodies of certain requirements, including the requirement that public bodies conduct its meetings in a public place that is open and physically accessible to the public, the City Council will be conducting this hearing virtually via Zoom. This hearing is being recorded. And it also is being live streamed at boston.gov/city-council-tv and broadcasted on Xfinity Channel 8, RCN Channel 82, and Files Channel 964. Written comments may be sent to the committee email at ccc.gata@boston.gov and will be made part of the record and available to all councilors. Public testimony will also be taken at the end of this hearing. Individuals will be called in the order in which they signed up and will have 2 minutes to testify. If you wish to sign up for public testimony and have not done so, please email our central staff liaison, Ron Cobb, at ron.cobb@boston.gov for the Zoom link, and your name will be added to the list. Today's hearing is on Docket 0415. An order for a hearing to audit the 2024 Annual Comprehensive Financial Report. This matter was sponsored by me, Councilor Julia Mejia, and we referred to the committee on February the 5th, 2025. I am going to just announce that I've been joined here by my colleagues in order of arrival, Council President Louis Jean and Councilor Flynn. And we don't have any letters of absence that I know of, and if we do, you guys will let me know. At the discretion of the chair, I think I am going to just make some brief remarks, but I'm going to waive opening statement because the panel does have a hard stop at 3. And just to kind of give people some context, we're holding this hearing as a part of our ongoing commitment to transparency and accountability and to ensure that the public and this body have a clear understanding of the city's financial standing and practices. Today, we'll be discussing the annual comprehensive financial report produced by the City of Boston's auditing department, which was submitted to, which falls under the oversight of the Committee of Post-Audit, Government Accountability and Transparency. So I just wanted to help people understand that while there may have been a previous hearing that was held on the financial well-being of the city, for the sake of the exercise, we are going to dive in a little bit deeper and give the administration an opportunity to go a little bit further in helping us understand the financial health of this of our city. So I'd like to introduce today's panelists. Panel 1 is from the administration. It is Chief Grafenberger, Chief Financial Officer, Collector of Treasurer of the City of Boston, Scott Finn, who's the City Auditor of the City of Boston, and James Williamson, who is the Director of Office Budget Management. So with that, this is your opportunity to let us know how things are looking. So we are expecting a whole presentation from you all.
Yes, good afternoon, Councilor Mejia. Thanks so much for having us today. I'm Ashley Grafenberger, I'm the Chief Financial Officer, and I'm joined by City Auditor Scott Finn and Budget Director Jim Williamson. So thank you for inviting us here today to talk about the Annual Comprehensive Financial Report. As you said, this is a very extensive, comprehensive document that provides a really comprehensive look at the financial health of the city. So we're going to give you some of the top line information today and look forward to your questions. So I will present and we will get going. Okay. So just to ground us all in what the annual comprehensive financial report is. We lovingly refer to it as the ACFR. So if you hear us use that acronym, that's what we are referring to. And it is a set of financial statements for a government entity that complies with accounting requirements set forth by the Government Accounting Standards Board, or GASB. And the ACFR is required to be audited by an independent auditor. And in this case, the city has used KPMG as our independent auditor. And what do we do with this document? As I said, it provides a comprehensive overview of the city's financial condition, and it is composed of three major sections. First, we have an introductory section, which explains the rest of the report. There are a series of basic financial statements included in the financial section, as well as the independent auditor's report, and other notes to the financial statements. And then there's a section that provides statistical information, other data about the government's activities and other things about the entity. So it is a very comprehensive document. It is just over 150 pages, is compiled primarily by the auditor's office, Auditor Finn's team, and then, like I said, done in close collaboration with the rest of the finance cabinet and our independent auditor, KPMG. So we have a series of slides that just talk through some of the top line notes from the audit or the ACFR itself. I'll go through them really quickly, but I think this is helpful to just give you a sense of the type of information that's included in the financial statement beyond just sort of basic revenue and expenditure variances. So in our 2024 ACFR, as of June 30th, the city has a healthy cash and investment balance of just over $3.1 billion, and we continue to earn strong investment income driven by the high interest rate environment that we are currently experiencing. As of June 30th, 2024, we have a capital asset balance of $3.33 billion, and we had expenditures on capital projects of $575 million, which is an increase over the prior year capital expenditures. In terms of debt and our long-term obligations, we had approximately $2 billion of bonds payable, and we issued $250 million in new debt in 2024. Or fiscal year 2024. And then our legal liability is increasing by $80 million due to an update to outstanding cases based on their probable outcomes. In terms of our net pension liability, as of June 30th, 2024, we have a net pension liability of $1.5 billion, which is a decrease from the prior year as a result of strong investment performance from the retirement system. And then our OPEB liability was $2.6 billion, which is an increase of $250 million over the prior year due to some changes in our assumptions and other cost increases. And then lastly on this slide, the net position of the city has an unrestricted deficit of $2 billion, driven by liabilities exceeding assets on an accrual basis. A few highlights from our governmental funds. So on the general fund side, which is what we spend a lot of time talking about when we come in front of City Council, talking about the budget. As I said, we maintained a healthy cash and investment balance of just over $2 billion in the general fund, and the city's unassigned fund balance as of June 30th, 2024 was $1.4 billion, which represents 30.5% of general fund expenditures, and that is well in excess of the city's reserve policy. This represents an improvement from prior years, partially driven by the budgetary surplus that we came and spoke to the council about at the end of February, and we'll get into a little bit in later slides. And the importance of maintaining a healthy fund balance is it allows you to deal with unanticipated revenue shortfalls or expenditure overruns that could occur. And just I know we have spent a lot of time talking about and learning about free cash together. Free cash is a subset of this fund balance figure. It is what the Department of Revenue determines as free, clear, and expendable every year. And so I think Our most recent free cash certification says that we have just over $500 million available. So while we have a healthy fund balance, not all of it is immediately expendable and available to us. We are only allowed to expend what DLS certifies. Our special revenue funds, just a quick note here. We had an increase in intergovernmental receivables of about 95 million due to the timing of receipt of ESSER funds. Those were the pandemic era education relief dollars that we received through BPS. And the city's unearned revenue was 305 million due to advancing funding from the American Rescue Plan, but we'll see that decline as we meet those eligibility requirements for that source. And then, as I mentioned previously, the city had capital expenditures of about 575 million in 2024, which is an increase over prior year capital expenditures. And a few other points here. Intergovernmental receivables into the capital projects fund increased by $16 million due to an increase in Chapter 90 and MSBA funding. And as I previously mentioned, we issued 250 million in new debt. Getting more to kind of the budgetary look of things, and this is if folks were able to be with us at the February 27th hearing, this will look familiar. On a budgetary basis, we ended fiscal 24 with a $88 million surplus. And as I mentioned, that rolls into rolls into fund balance, and then after accounting for offsetting liabilities, translates into free cash. Our revenue surplus really drove this overall bottom line surplus. Our revenue surplus was 177 million. And like I mentioned, that was driven by really strong performance in our investments due to the high interest rate environment, as well as strong performance in our excise tax revenue and other departmental revenue. And then on the expenditure side, we had required spending in public safety and execution of courts that exceeded budget by 89 million. So the strong revenue surplus offset by that over expense in public safety and execution of courts results in our bottom line $88 million surplus. So very strong year for the city in fiscal 2024. And then the next two slides are just a representation of how these revenues performed, broken down based on the city's tax rate budget. So as you can see here in the middle of this table, interest on investments is what greatly exceeded budget. We had a budget of $29 million and we collected 163 million on interest on our investments. So that is a very significant driver of our surplus. And then on the expenditure side, you see everything was on budget with the exception of the 89 million in required spending for public safety and execution of courts. So that is reflected here. So I think that concludes the presentation, the formal presentation. And we are happy to take questions.
Thank you, Chief. I'm going to begin with my colleagues first. So I'm going to go to Councillor Flynn, then followed by Council President Lujan. So Councillor Flynn, you now have the floor. And 5 minutes because they got a hard stop at 3.
Thank you, Madam Chair, and apologize for not having my video on. I guess one question I'd like to start with, can you give us a little bit of background on the upcoming settlements that the City of Boston might be settling in the court system, and what would the outcome be in terms of how much will it cost the city over the next year or over the next couple of years? Any ballpark figures?
Sure. So I can't speak about the very specific cases, but if you saw on the first slide of the presentation, we talked about an increase in potential legal liability due to cases and their probable outcomes. I think that's driven a lot by a series of wrongful conviction, wrongful imprisonment type cases that you've seen, and the probable settlements that can come along with those. The law department works closely with our auditor to provide information on that and come up with a estimated legal liability. So there was a significant, or a somewhat significant increase in the liability we are anticipating if those were to all settle and have a significant settlement. So can't speak to the specifics, but there, we are reserving and making sure we're well reserved to deal with those potential liabilities.
Were they wrongful convictions and civil rights related issues?
Yeah, again, without having the very specific cases, I just know from, conversations with the law department that those are types of things that can drive an increase in the liability.
And when those are settled, are they then public documents?
Yes.
Okay. Yeah, I'd like to look at those when those are settled. Would we be able to look at previous settlements to see where and how much the city has spent on that issue?
Yeah, I think all of that information is available. We can certainly connect with the law department to understand what documentation is readily available, but to the extent that they're all sort of dealt with through the court system, whatever is public and available through that process would be available.
Well, thank you. Yeah, I'd be interested in reading that.
Sure.
And then my final question would be, going forward, maybe over the next 5 years, 10 years, with city salaries increasing and retirements taking place, at some point everyone's going to, I think the average salary now for city salaries is at $100,000. Is that what I read, or?
I don't know the exact figure, but yes, we did just publish the calendar 2024 earnings file, if that's what you're referring to, but I don't remember the exact figure.
Okay. But at some point, each person, each retiree will probably be getting at least $80,000, $70,000 in retirement. Certainly they're living much longer, 30 years maybe, after retirement, and then replacing that worker with another $100,000 salary. How are you factoring that issue in?
Yeah, thank you for that question. So we, the retirement system works with an actuarial consultant to do just what you described. And so they previously had been doing this every other year, but now we have switched to an every year actuarial evaluation to both incorporate the fund's performance as well as the makeup of the workforce. And that takes into account how long people are living, how much they're making. We make assumptions for wage increases over time. And so that all gets fed into the actuarial evaluation that we do. And so the city at this point in time, as of our last evaluation, is over 80% funded on that unfunded liability. That's a decrease, we are making really good progress towards fully funding that unfunded liability. And I think the current schedule has us reaching full funding at 2028, at which point we will switch to just sort of normal cost. But all of the factors you described, Counselor, are the types of things that our actuary takes into account when they're giving us that valuation of the fund status.
Thank you. Madam Chair, thank you. I have no further questions.
Thank you. Great. Thank you so much, Councilor President Louis-Jean. Let me reset the timer. You now have the floor. Thank you.
Thank you so much, Madam Chair, and thank you so much to everyone for being here. Chief Grafenberger, you were saying that there's an unfunded liability that we will fully fund by 2028. Can you remind me what that is again?
What the unfunded what that means, or how much that is?
No. What is that? Is that our pensions? Is that our pension?
Yes, that's our pension. Yes.
Can you explain what that means? Like, will it fall into Like, will there be a date again where it then becomes unfunded again?
Yeah, so it's depending on a lot of factors. Again, like, we could have poor fund performance, for example, and then you could, it's not uncommon for jurisdictions that reach full funding to sort of, potentially go back and forth between funding and, unfunded status. So that's something you will have to monitor, but we are obligated under state law to reach full funding by 2040. So the hope is that we hit full funding and then we just maintain normal costs, but we will have to, occasionally make adjustments if we slip below full funding status at any point after 2028.
Okay, thank you. And I have a question about like the contracts that we approve and that we add. Are we like, do you still have confidence in the fact, we as a council and so many of us have been advocating for increased pay, and that's very important, of our ability to continue to like be a fiscally strong city as we continue to negotiate contracts that are, in alignment with our values, which is paying people for their, their worth and their work and their dignity in a city that is, increasingly expensive. And also taking into consideration the city's fiscal health and our ability to do what we do, and changing and shifting revenues streams. So just wanted to get your overall take. I don't know if that was discussed during the report. I was distracted for a moment, but would love to just hear your take on that.
Yeah, thank you. That's a great question. I mean, that's the tension that exists always when you're doing these labor negotiations. Of course, you, as you mentioned, want to negotiate fair contracts that reflect our values and make this a place where our workers can live and work and thrive with their families. But we also need to do so in a way that makes sure that there's a place for them to, that we're in a position that we can afford them, right? So that's always the balance in negotiating these contracts. And I think, the Wu administration in particular has, placed a real focus on lifting up the lowest paid workers and really targeting increases to lift up those. But again, also always with the long-term fiscal health of the city in mind. So I do have a lot of confidence that we will continue to be able to strike that balance.
Thank you. I think I'm going to have more questions on this during budget, but so yeah, because I want to make sure that we are striking that right balance. And if not, want to know what we need to be poking at a little bit more, where there's more work to do. So thank you. That's my question. Thank you, Chair, for holding this hearing. I appreciate your time, admin.
Thank you, Madam President. I appreciate you being here. So I do have a few questions, and I know that we have a hard stop, so I want to be respectful and mindful of everybody's time. So, Council President, unless you have a second round, I just want to just make sure that you feel good. So you're good? Okay. All right. So, and I see that Councilor Flynn is no longer here, so I'm just going to ask a few questions, and if anyone has an afterthought or something else that they want to ask because they got inspired based on what they heard, we'll still be here until 3. So, Ashley, Chief, thank you so much for being here. I do have some kind of weird questions, and maybe it's more so for helping our audience understand some of these things, because I also have questions, and I'm curious about the aircraft fuel excise tax. It decreased by 15 million this year, and why is this the projected revenue so much lower than the actual from FY23? Where does this extra money, is that why, where does this money go that is extra? Like, where does that end up? Help us understand that.
Sure. Jim, do you want to add some context here on that particular revenue source?
Sure. So, Councilor, that's a great question, and it has a couple of variables in it. The City of Boston is great to have that option to capture and excise fees from jet fuel from Logan International Airport. But the changes in the budgetary amount is somewhat related to airport operations, how many flights are leaving from Logan, but also the actual commodity cost of the jet fuel itself, because we have we get a percentage of it. So that reduction in revenue year over year has more to do with the commodity price of jet fuel than it really does, because we actually had an uptick in the actual airport operations during that period.
Okay, thank you for that. So the second question I have is like in terms of like revenue that we get, property is 70%. You know, it's 70%. Property is 70% state aid, 11% excise, 6% interest rates from investments. I may have these numbers in the wrong place, but the actual interest rate for FY23 was 88 million. I believe, and projected for 2024 is 29 million. And I'm just curious, what is the actual for 2024, and why is the projected so low? You know, FY is 100 million, and you know, so it's just I'm just trying to figure out kind of like where's all of this coming from, and helping our audience understand these variables would be helpful.
Yeah, it's a really good question. So as you said, the budget that we assumed for interest on investments in fiscal 24 was 29 million, and we actually collected 163 million. So quite a difference there. I think so if you go back a few years and you see how much interest income the city was earning, it was like, I think $3 million. So this is a function of this high interest rate environment that we're in, where we have all of our cash that's earning a lot, just, you know, given where interest rates are at the moment. But we don't expect that will continue. And so we tend to budget this revenue source a little bit more conservatively, given that, you know, at any moment the Fed could adjust the Fed funds rate, and then you know, as they are saying they want to do, right? That is the hope. So at any minute, you know, this revenue source that we have could go back to sort of a more normal level. And so wanting to make sure that we're not building a budget that's assuming a continuation of this level of interest on investments that won't be sustained. So I know we're talking about 2024, but for the 2025 budget, we did recognize a little bit more interest income in our revenue projections, or in our revenue budget. I think we assumed 80 million, Jim, I want to say. So we did pick up a little bit more in our budget, but again, it wouldn't be a great idea for us to be budgeting for this high amount, given that we expect over time that will start to go down and return to more sort of normal levels once interest rates come down.
Thank you for that. And then I'm curious around the departmental income. In FY22, it was 84 million, and the actual for FY23 was 88 million. And the projected for FY24 was 70 million, and that was the projected. So I'm just curious, what was the actual departmental revenue for FY24?
Jim, do we have that one on our sheet?
You're on mute, Jim, just in case.
Sorry about that. We have departmental revenues. We had budgeted in 24 $295 million. We actually collected 352, so $57 million to the good. So that's an accumulation of lots of different types of revenue sources. Some of them are, that's where we have some of our 121A agreements. That's where we have things like building permits, things of that nature. So there is some level of variability with that. That may cause a spike in revenue one year and a fall off in the next.
So can you provide, thank you for that. So for FY 2024, the projected expenditures versus the actual expenditures, you know, it would be helpful if you could please explain based on all the expenditure categories with a focus on personnel. I'm just curious why there's some discrepancies that exist. So if you could just help us understand some of those, like i.e. what was projected total for the personnel expenses versus what was the actual spent on personnel for FY 2024.
Sure. So Personnel, it sort of dovetails with the reportable deficit situation. So personnel as a category of spending includes both what we refer to as permanent employees, regular position salaries, and overtime, along with some other categories of personnel type spending like workers' comp and unemployment benefits. But overall, our personnel budget was in deficit, mainly driven by the public safety overtime situation. So we do acknowledge that the budget we established for public safety overtime is probably not as realistic as it should be. It's probably not even aspirational because it's we over time, particularly in the period fiscal year 22 and 21, we reduced those public safety overtime, and with the hope that some operational changes have changed, but it continues to be a need to, and it's driven largely by replacement overtime. So in order to make sure that their police officers and I guess a sworn fire to be available for their regular shift, they call people in on overtime.
Yeah. Jim, thank you for that. I do have just a quick follow-up as it relates to some of the questions that Councilor Flynn asked, since we're talking about police overtime and liability and padding things for, when you talk about the budget and unsure of kind of cases that are outstanding, are those civil infractions that are put forth towards when people sue the city because police treated them in a way that they felt their civil rights were being violated? Is that what we're talking about in terms of that line item? Because we don't know the nature of all these cases, there's really no way to determine what the outcome is going to be of those cases. And so therefore, in this in the case of abundance of caution, is that what they used to say back in the day? But is it like for that? Is that what we're talking about in terms of just padding it because we just never know, because these are still outstanding court situations? Is that what that is? Or somebody slips and falls in city government in the office? I don't know how often that happens or if those things happen, but people joke all the time if they fall in the sidewalk, they're like, oh, we're gonna get you a case, is that what you're talking about? Just so that those folks who are following us understand that from a place that we can understand it more fully.
So Councilman, here on that, it is everything. So it could be a car accident with a city vehicle. It could be wrongful convictions. It could be employment cases, discrimination cases. So it's anything that we have that the legal department has received a motion or someone has filed a legal case against the city is when we start to look at this. And then we evaluate, how long this case may be in the court system for, what's the probability, what precedent has been set in prior cases. So we do a real extensive analysis of that. And a lot of it is based on, which Ashley referred to as GASB earlier, the Government Accounting Standards Board, that is required under financial presentation. So we have to assess that liability based on certain factors. But to the main part, it could be anything. Not specific, not anything specific categories. It's overall.
And is this a normal practice, from administration? Has this administration seen a higher number of these sort of things, or is this normal, Scott? And I'm just asking you, I'm just assuming that you probably.
So in the past couple of years here, I don't think it's been any different. And like I said, the process itself is a federal requirement for us in financial presentation. So it's been, I've been here 10 years and we've had to do it every year. So it's been we've had this process over 10 years, I would say.
Okay. Thank you for that clarity, because I just think that people don't know what they don't know, and they hear, the city's always in the news, and we're, There's some cases that sometimes people just settle and it just makes more sense to do that. So you guys weigh out what makes the most sense, whatever the legal situation is. Okay, so I'm just curious if you could talk to us a little bit more about, this question is, you described earlier the Boston Nets position as June 30th, 2024, that the city had unrestricted deficit, I think, of 2 billion, driven by liabilities accessing assets on actual basis. Can you explain this for the general public? What is that? That's a lot. What does that mean? Please help us.
Well, I'm going to let our city auditor speak to that.
Yeah, so that one gets confusing. So that set of statements that we have that on, so that is as of June 30th, if we owed anything, including our pension liability to become fully funded, our OPEB liability, and our full estimate of legal liability. So those are things that were expenditures, plus we have some surpluses. We talked a lot about interest, but if on June 30th, we had to pay out every single liability that we owed, whether it's long-term or short-term, we would be in a deficit of $2 billion.
Okay, thank you for that. Yes. And, we're going through this exercise, this is something that our committee is really trying to do, is to help educate people. I know we're going to go through a series of budget hearings, but I think that sometimes people don't know what they don't know. And I think we want to walk into this season with a better, clear understanding of the language and the things that you all refer to, so that we're not Googling things in between your hearings, right? So that, and the folks who are following us know what this all means. So thank you for that explanation. So I'm just curious, I think you talked about projected, but I'm just curious if you could just tell us, these are a few questions, right? What was the actual budget for FY 2024? What was the actual number?
The actual budget, it should have been on the slide. Hold on.
I may have missed it, but just for the record, and then what adjustments were made since the budget was adopted in June 30th or July 1st? It would be great to know what adjustments were made and why those adjustments were made. I understand that, there was some visuals around the projected revenue versus actual budget. I'm just curious why the numbers are growing so much year to year, and why is the projected versus actual, what constitute those differences? And for the property taxes in particular, which is the biggest bucket, I'm just curious in terms of kind of like what we're thinking about and how we're moving forward in this season in regards to the property taxes, and kind of like what are we grappling with now. I asked a lot, and I hope y'all wrote down my questions because I can go back to them.
Yeah, I'll start just with the last question you asked on property tax. So we typically will, as we're setting the budget for any fiscal year, we will take last year's property tax levy, add on our allowable 2.5% increment that we are allowed to grow that levy under state law. And then we will make an assumption for what we call new growth. So basically any new value that's going to come on to the tax rolls, something is built, new personal property gets acquired, that sort of thing. So we make an assumption for how much new value we expect is going to come on to into the levy in the next fiscal year. So that's how we approach property tax budgeting. It's very stable, which is great. And as we've spent a lot of time over the last year talking about property tax, it is our biggest revenue source, but it is incredibly stable. So we're really lucky that we have that. I think you had questions about the adjustments to the fiscal 24 budget. So generally, I think that budget was $4.3 billion, fiscal 24. And as I mentioned, we spent 4.4. That's the difference of about $89 million. And that was driven by expenditure overages in public safety overtime, as well as execution of courts, which is the amount we pay out for any kind of judgments or settlements during the year. So those two things together represent kind of adjustments that we made during the year when we were closing the books. I think just in terms of, I'll let Jim speak to this a little bit more, but just kind of in terms of like throughout the year, like the types of budget management things that we do, that is what Jim and his team are focused on. And then at the end of the year, the city auditor has the ability to make a series of transfers, and we submit a list of year-end transfers to the council. I'm happy to resend that to you, Councillor, if that would be useful. That shows where there were underspending and overspending in certain lines and how the city auditor makes those balance at year-end. So that is kind of the life cycle of this process, but I'll invite Jim or Scott to add anything.
Yeah, and before y'all add something, you just inspired a question here, is that what if any appetite is there? You know how we're always talking about right-fitting Boston Public Schools and closing schools so that, we can save some money here and there, whatever. I hear that, and I don't think that should be the business that we get into, but given the fact that we've had vacancies and positions, from a financial standpoint, what if any appetite, or has there been any discussions around right-fitting City Hall around our, the fact that we have had so many positions that have gone unfilled, and that money is sometimes, you keep, Jim, you're shaking your head, so I'm assuming you're feeling what I'm saying, or what?
I'm hearing that narrative from a few different angles. So no, it sounds very familiar to me what you're saying.
Yeah. So then, I guess to that, what would you say to that? Because I think that people want us to be fiscally responsible. Then I also think about the service and deliveries, and that oftentimes it does take a while for us to onboard people, and sometimes we onboard people and they're not a good fit, and then that takes time to then do a series of interviews. So, there is a lot of savings there as it relates to personnel. Would you make any recommendations in terms of our hiring and, retention strategies? Like, how can we get a handle on the situation? And while I know we're here talking about the financial fiscal well-being of the city, but I'm thinking from an audit standpoint and really thinking about how we can do business differently. What conversations are we having or considering?
Yeah, I mean, the bulk of most departmental spending is relates to positions and personnel, and we can't really understate the impact that COVID had to the city's workforce. There was service interruptions, positions were left vacant, particularly for departments that had public-facing places that were maybe shut down. But we've been working through that, filling vacancies. We definitely, services have been restored, but it is an assumption that we build into every budget and have every year, that there's an assumption that there is that churn of filling positions. And we refer to it as salary savings, which is basically you take your table of position values and you do like a negative adjustment to say, oh, we expect this level of attrition or periods between, but by the same token, we're being sort of pushed on to like reduce our hiring time. So there's been a lot of concerted effort on turning around, making sure that we're moving requests to fill positions as quickly as possible. Departments themselves have been involved in recruiting days and efforts to fill hard to fill roles like lifeguards and 911 call takers and the like. So all of those efforts, but there are lots of workforce dynamics that go beyond the city of Boston where it's challenging to fill. It's not like we're alone in some cases.
Yeah, okay, thank you. I know I have 10 more minutes with y'all, and I had like 100 questions that I asked you, and that I hope you took, because I have one more question that I want to get into the bucket of, so y'all can have some time to dig through. You guys said that during FY 2024, the city capital expenditures on existing and new budgets of 575 million, which represented about 186 million increase over a year in capital expenditures. Can you just also help us understand what increase do you expect for this upcoming year? Like, just so that we can start bracing ourselves. Yeah, so I just wanted to add that question into the mix. And how are we grappling with the fact that the city council is working from an adopted budget while the FY actual budget shows many adjustments? Like, I'm just curious about how that helps us set ourselves up for success since the council isn't working with real-time numbers. How can we move forward with a clearer understanding of kind of the numbers before we start thinking about things? So that's just more of a process question that I would like to just share for consideration. I'm not gonna ask any more questions until we get through all those other ones that I just dropped on y'all. And if I have any time left, I'll ask some follow-ups, but I'm gonna put on mute.
Awesome. Great. No, appreciate all of these questions. So just on the capital expenditure question, a lot of that, I think there's, and Jim could weigh in too, but I think there's probably a lot of variability you see in year to year. And that's driven by sort of the timing of when projects are happening. You see cash flow and spend ramp up, like, I cross the North Washington Street Bridge every day, and that a lot of work is happening on that. So you're seeing a lot of spend on that particular project. So a lot of that is just driven by like when things are actually happening and being built. As for what it would be next year, I don't know if we know at this point or would be able to give any certainty as to what that annual spend will look like next year. We can certainly think about that and try and estimate, but I don't have any thought on that right now. I think, and then as to your question about the kind of adopted budget versus actuals, this is it's a large operating budget. It's 4.3 billion, and we do our best to, again, give everyone a sense of how we think things will work and where the spending will happen during the year. But it's a large, complex organization, and so there are changes and adjustments that need to be made during the year. We do our best to inform the council of that. I think we have gotten into a good practice of working with the Ways and Means Chair and that committee to provide regular reporting, I think on at least every 3-month basis, but maybe even more frequently, about revenue and expenditure actuals, so that we can be keeping you all informed of where there are changes happening. So we are doing our best to keep you informed, but and want you and encourage the questions, because it's a large budget. Things have to be adjusted and changed throughout the year, and it's good for all of us if we have that information.
Thank you, Ash. Scott, I asked questions that I think, was there a question that you were supposed to answer?
I think you had a question around the transfer. So I think, the transfer is, so the two parts to that. I think that when we've talked a lot about interest today. So when we have something with excess interest, I can't use that money to cover any departmental overspend. So when we look at that transfer, it's only, I take a look at, outside of public safety, execution of courts, and any snow budgets, which we're allowed to have reportable deficits in under state law. We look at all other departmental, any departmental deficits, and then we have to use any departmental surpluses to balance that out. That's the only way we can balance that out. We can't touch the top half, so we can't look at overage. So like big surplus on interest, I can't use that to cover any current year actual spend. That would just fall to our fund balance and be subject to future appropriations.
Now, and I just, for the sake of this exercise, I may have missed it, but did you all give me the actual budget for FY 2024? Can you say that again? What was it? What was the actual budget for 2024, and what adjustments were made? I didn't hear that. Or maybe if I did, I may have dipped out of my audio.
So the adopted budget was 4.292 billion, and then we actually expended 4.381 billion.
Really? Um,
And that's driven by the public safety overtime and the execution of courts or the judgments and settlements. So that's that $89 million expenditure variance I mentioned.
Okay, that's where the discrepancy is, okay. All right, so then I'm just curious, if you could just, just because we're, trying to get a handle on all of this, you had talked about, and I'm curious if this is even possible, but will we be able to get a binder of the adopted budget rather than the recommended budget at some point? Like, at what point does the budget get, like, that's the recommended? Can you help our people understand when does the adopted budget situation comes out, and is there a way for us to get a binder?
Yeah, what so we typically don't print and bind the adopted version of the budget. We do a version that we deliver in April that has the recommended budget, and you're right, there are changes that occur that show up in the adopted budget as of June 30. They include, the recommended budget plus anything that's returned, plus any council overrides. So that's where the adopted budget. And we do the full version on the budget document, we just don't print and bind it. It's all every piece of the paper is put online, and we could certainly go to seek to print it if you'd like, but it's
We don't
it's
want
all,
to kill, we don't want to kill trees, they'll get mad at us, so you can just.
but
But I think what we should do, and this is a recommendation that I'm going to make moving forward, is that once the adopted budget is executed, then I think we should have a hearing on the adopted budget at the very least, just because out of good practice, it'd be good to, and I'm just curious from a timeline perspective, when does the adopted budget get?
when we typically, we've been in the practice of sort of publishing it probably in the September timeframe. Adopted one of the, and we submit we have an organization that sort of evaluates the quality of our budget presentation. It's called the Government Finance Officers Association, GFOA. So we submit that to be evaluated by a set of evaluators to make sure that all of our content is consistent with the best practices in budget communication. And so that we typically put a little bit of extra effort in, like making sure that all of our tables are complete and some other elements are added. So that's usually what takes us that extra time to just generate the document. But as of the last meeting of the city council, that's when the budget is officially done.
Yeah.
So
Yeah, I think should, like, in September, just do like a quick little, like, here we are. I think that would be just a good practice for us, and y'all are shaking your head, so I'm going to affirm that that's nonverbal thumbs up here in the world of Zoom, that y'all are feeling that idea. I just think because that also helps us build better relationships and also manage our expectations, and that, we're not asking for crazy things that we can't get, because, it is what it is. And I'm just curious, what was the increase in the police overtime and execution of the courts in FY24? An expected over budget item, or are there similar areas we should anticipate going over budget in FY 2025? Like, are there other items that we need to pay attention to that you saw in 2024 that is out of the norm?
So, Council, those are excellent questions, and those are basically what the budget office is on a recurring basis, reaching out to both police and fire to check in on the status of their overtime. They've been doing much better in the current fiscal year. There was some modification that came through their collective bargaining contract that allowed for some relief that impacted overtime and replacement needs. So we still are pretty certain that there will be a deficit, but I think it'll be much more contained than, or at least we hope it's much more contained than happened in 24.
Okay. Yeah, because I think, what happens is that we end up with surprises, and we're like, how did we end up spending that. So this is, we're reviewing the financial health of 2024 with also the hope of understanding what we should be expecting and embracing ourselves for this session. That's what the audit is, the committee is made of, right? And I just want to acknowledge Councillor Yancey, who, has helped has joined us to help support this particular committee. And so this is a good practice, and I really wanted to just acknowledge him for his support. And some of these questions were his helping us, and some of these questions were mine, just so you know. Some of this question was my team. So this was a team effort. So the next time that we do this, we'll be far more, ready to ask so much, many questions. But I also need to be mindful that we do have 3 minutes left. And I want to just thank you for your time. And I keep saying one last question. I keep asking y'all some more, but I'm just curious. Not sure if someone has already asked this, but what happens to dollars that are slated for positions that go unfilled? Can you just help us understand that one more time? And how much free cash have we projected? And what's the difference between our assets and liabilities, and where does that money go? Because everybody keeps talking about these blank checks we're running around here. Like, people really do think that there's this thing called free cash, and they're gonna knock on your door and y'all gonna get a check. Like, can you help people understand that is such a bad name for it, for you guys in the financial industry? Can y'all help us understand this situation, please?
Yes, Counselor, I'm going to defer that question to my colleagues. I unfortunately have a meeting to chair, so I'm going to step off. But I agree with you. The term free cash is an unfortunate term that is not ours. It is a term that we have gotten and adopted from the state. I know it is confusing and probably needs to be rebranded. But I thank you so much for having us, and I will defer the question to Jim and Scott, and happy to follow up with other questions that you might have. Thank you.
Thank you.
So Counselor, I can just give kind of a quick overview of free cash and try to do like a walkthrough example. So say, for instance, we start out where we say we have a surplus. I'm just going to say $100. Obviously, it's way more than that, but just to kind of walk through a process. So say we have $100 in our fund balance at the end of the year, which would be the difference between our assets and our liabilities. And then we have an instance, so we talked about ESSER dollars. So we put in a reimbursement. ESSER we got a little bit money up front to start out in the pandemic when it came to ESSER, and then everything went on a reimbursable basis where as BPS spends that money, then they submit for reimbursement to the Commonwealth reviews it, and then sends us our reimbursement. In our surplus, we are taking into account that we've submitted a reimbursement for $50, but we haven't got it yet. So we have to restrict our fund balance by $50 now. So say our fund balance is $100, but we have this restricted amount because we haven't got the actual cash in yet. Our free cash would be adjusted down to $50. There are different types of adjustments. The biggest adjustment is the intergovernmental receivable. And when we say intergovernmental receivable, it is made up of our grant funds that we have each spent and not received reimbursement for yet, which is more than 90% of our grants are on a reimbursable basis. ARPA, we got the money up front. That is not a usual case. It's more that we have to front the money and then we seek reimbursement from whatever governmental agency awards us. So it really takes our overall fund balance and then has adjustments to it, and one being the intergovernmental receivable, which is the biggest driver on that, and that brings us down. So it's like, if we look at, we have this big surplus, or we are a fund balance, but then our free cash is much less. It's because there are other things that we have to restrict it down to more of a cash basis versus a financial reporting number.
Yeah.
I hope that was helpful.
It was, and I'm just curious if you both have to, am I done with y'all? Because I do have some additional questions, and it's more around some of the expense categories here that I wanted to unpack, but I also want to be mindful that We were advised that the administration had a hard stop at 3, and I want to be respectful of that hard time. We do have another hearing slated for March 27th. We're going to focus more on some of the capital budget investments and kind of doing a deeper dive there. I may slide in some other questions that I didn't get to ask here because it's all part of the same hearing order. So I'm just curious, just out of respect for you all and your time and understanding that I was advised that you had a hard stop at 3.
Appreciate that, Councilor. Yeah. Yeah, I do have another appointment myself, so, yeah.
All right, so I want to be respectful of the hard stop. I am going to keep this docket in committee, and I want to thank the administration for your time with us and thank my colleagues that have participated. Ron, are there any folks waiting for public testimony?
No, there isn't. No.
Okay, so, well then, I am calling this hearing with my fake gavel to a close. Thank you.
Thank you.
Thank you, everybody. Thank you.
Thank you.
Bye-bye.